Hello traders, and welcome back to the channel. Today we'll be answering the question, what in the world is happening with the markets? Well, after Trump's sweeping new tariffs, the volatility has exploded, and in this video, I'm bringing down exactly how these reciprocal tariffs are shaking up the Nasdaq, the S&P 500, and what this means for your money. We'll analyze real-time price action, market sentiment, and show you where the next major support and resistance levels are. Whether you're trading or investing, this video will help you stay ahead and avoid getting caught on the wrong side of the trade. So, let's get into it. As we know, on Liberation Day, President Trump made a major announcement, a sweeping set of reciprocal tariffs starting at 10% across all imports, and even higher for certain regions like China and the European Union. This wasn't just noise, this was a shock to the global economy. Markets immediately reacted. As of today, the Nasdaq is down over 10% from the highs and reaching 15%, signaling a deeper correction, and we're officially entering a correction territory. The S&P 500 is trading near a major support zone, and we'll dive into those technicals in just a bit. What is Trump's goal? Well, as we know, it is to bring back American manufacturing. But at what cost? A potential 2% drop in the US GDP had inflation pushing closer to 5%, according to UBS. First, let's pull up the daily chart of the Nasdaq. As we see, the chart is broken and we have failed below key areas of support, which have been the 50 EMA, the yellow line, and the 200 EMA, which is the white line. When we are below, that means that the sellers are in control. And if we gauge this further, this could have been analyzed back then. If we plot an anchored VWAP from this high, basically if we get the average price in which the short participant entered the market, we see that they entered an average price of $41.95. Now, this is what we call the swing high anchored VWAP. And then, if we plot the anchored VWAP or get the average price in which the market participant entered from the initiation of the bull market, they entered an average price of $466.94, right? But today we closed at $422.67. The momentum is straight to the downside, and the reason that let us know that we are now in a bearish sentiment is the break of that anchored VWAP. Basically, the buyers failed to hold their levels, and the sellers were just too much, and they brought the prices down. Pretty much, we saw a bounce, a quick rally, which showed that buyers here were still present. But as we bounced, we rejected from that, showing that the sellers that came at this high right here were still present and more aggressive, and they came down and just obliterated the buyers, which could not defend their area of entry from the initiation of the bull market. It shows us that there is more bearish sentiment. Now, the price targets that we had of support were the 447, but we already sliced through it like butter. And the next one, which I did not believe we were going to achieve, was a 424. You can always check back my video that I posted around 7 days ago, which is what was happening with the markets. And we explicitly said that if this case happens, this is what would happen to the markets. Now, the next areas of support are going to be near the $413 level on the QQQ. There's a daily chart, I repeat, and hopefully we don't achieve 395, right? But we don't know. This all depends on the market news and the sentiment, which has been increasingly volatile. We can also check the VIX on the daily chart and look at that. Look at that upside momentum. The volatility saw one of the biggest increases. We are getting close to that August drop that we had in the market, right? And this has been the highest that we've been since that time. Just shows the fear that exists in investors. Also, if we pull the overall daily chart of the gold, we see that gold has been in all-time highs. Investors are selling their equities and they're depositing their money in towards safe haven assets because of this increased volatility. And as long as gold keeps making all-time highs, the Nasdaq overall market will see continued bearish sentiment. We also can look at Bitcoin, and it's been holding quite well. Bitcoin isn't really affected by tariffs, as we know, as it's not physical, but the sentiment in the market can propose a deeper sell-off of Bitcoin. But currently, we're happy to see that it's holding, and it's holding above the $80,000 level. Now, if we look additionally towards the put to call, if we look at this chart right here, we see the put volume for the 7th of April is 1 million shares compared to the call volume of 823. If you keep going down the list, we see that the calls are less than the puts. The puts are always greater. See, greater, 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 greater into this portion here. But this is greater. Look at this. Look at this. Almost half, more than half of the puts than the calls. Look at that. This just shows the increased sentiment, and that if we keep getting these negative news, we will continue to see the downside. And the numbers are just supporting and giving us the evidence that this is a deeper correction. Now going back towards the SPY and looking at that, we also just had that intense, and these levels came to hold. As we can see on the daily chart of the SPY, we just sliced through that $500 level, 510, and that was supposed to be the next area of support, right? But we just failed it. The next area of support, if we continue the downside here, is going to be towards the $493 level if we continue to see the downside movements. Now, as we know, investors are worried. What does this mean, and why does it matter for most traders? Well, this isn't just about policy. This is about positioning. Institutions are moving. We're seeing the options flow spike, the put to call ratios rising, and defensive sectors outperforming. That tells us one thing. Smart money is hedging. If you're a trader, this is where you pay attention. Now, are you seeing a short-term overreaction or the start of a deeper trend? The charts will guide us, but the sentiment is shifting fast. This is where being prepared gives you the edge of not reacting, but planning. Please hit that like button, subscribe, and turn on notifications. I post multiple videos a week to keep you ahead of the markets. And as always, don't forget to sign up for my free daily watch list and newsletter. You'll get in-depth market levels, sentiment breakdowns, and trade ideas straight to your inbox. No noise, just execution, ready insights. Stay sharp out there, and as always, don't let the market whip you out.